Hey everyone, welcome to December. Merry Christmas and all the best to everybody in the new year. I hope this is going to be an amazing time of year for you. It's always great to get together with family and friends and celebrate Christmas. The real estate market is it's on fire. That's probably the best way to describe it. Um, I'm just kind of in awe as to what's actually happening. You'll notice that in the month of November, 81%, almost 82% of the detached houses that were listed sold in November, which is normally a slow month. We have not seen a market like this ever. Even in 2005, which I am dating myself, I'm sorry, but I was around then and I was selling real estate, and I remember the market just taking right off. And it's not even what we're seeing now. It wasn't an 82% absorption rate. So take a look at this. Our benchmark price is $542,600. And if you go back just a year ago, we were at 490. This is rising at a rapid pace, and it's really simple. We have a high demand and we have, fairly low inventory levels, which I'll get to in a second. But I always like, going back in time and looking at where we're at, as opposed to where we started. And you go back to 2012, our median price was 443. So, we're just seeing some significant price increases, and it's really not seem to be ending at all. It's continuing to go. So here's the numbers. We had 1,526 detached homes listed for sale. A year ago, we had 2,242. We only sold 884 of them a year ago. Today, we have 1,526, which is a significant drop, in the amount of homes that we have available, and a massive amount of demand where we see 1,246 sales. So it's really simple mathematics, folks. We don't have enough inventory to meet the demand, especially in the detached market. And what is happening right before our eyes, and I more or less predicted this, we're seeing people from Ontario and British Columbia that are coming here, and they're taking advantage of these lower prices. Those markets have gone so high that it's bringing people to Calgary and other parts of Alberta as well, and it doesn't look like this is going to stop. The only concern I think we might have, and it's hard to say how this is going to play out, but interest rates are going to go up. And I don't know what might happen. It's always possible that the interest rates could cool this market right off. That's possible. Or this demand just might continue. It's really anybody's guess as to what might happen. But at this very moment, if you want to sell your home, this is a really good time to sell. And I don't normally say that in December, but it's a really good time to sell. So here's our market distribution. And you can see that, 400 to 500 is still the highest demand for detached houses. But with the price increases, we're just seeing less and less inventory under 500,000. And you can see 5 to 600 is 23%. This is slowly creeping up. If this continues, the 5 to 600,000 is going to start matching the 4 to 500 range because these prices just keep shooting up. And you can see we got very little under $400,000 and, almost nothing under 300,000. So those days are over. And you can see also our luxury market, especially the $1 million to $1.5 million, because that's always a market I look at, still 4.16% of our entire market. So all the boats are rising. All of the price points are going up. A lot of people are moving up, and there's a lot of first-time buyers getting into the market. My advice is, if you're a buyer, this is a really good time to take advantage of these low rates. It's a given. Why not grab a home while the interest rates are low? Because even if the market cools and the rates go up, it's costing you more for a home. So I think it's a good idea to be looking now, even though the inventory is tight. I don't know what it'll look like in January and February, but typically in the colder months of the year, the market slows down a little, and I'm going to guess that we'll cool off just a little here in December and January, and it gives an opportunity for some buyers to maybe get into the market. All right, let's take a look at the semi-detached. This is also crazy. 66.77% absorption rate. I mean, that's almost double from a year ago. Our benchmark price, $429,800. We've come up considerably from $395 a year ago. Look at how much we've risen since 2012. Everything is looking good for semi-detached. 211 out of 316 properties have sold. Same scenario, lower inventory than last year. We had 455 homes listed a year ago with only 152 sales. So it's really simple again. High demand, low supply. It's bringing the prices up. Still an average days on market is 49, but I can tell you, just like the detached market, if something good comes up and it's priced right, we're seeing it selling with multiple offers in literally 1, 2, 3 days. So some of these properties that are sitting around, there's just some of them they're just asking too much money for. Here's the market distribution. You can still see in the semi-detached, our biggest market will be under 400. As I always say, it's people's second choice for the most part. If they can't get into a detached home and their budget's under 4, this is the next best thing. But then, of course, you got the infill market, and it's still continuing to do well. Now the $700,000 to $800,000 range has actually surpassed the 6 to 7, so that tells you that prices are going up here as well. Still a little softer when you get to 8 to 900,000, but I know even I sold an infill just a couple of weeks ago, and it sat for about 30 days, but we managed to sell it, and that was one that was right on 24th Avenue, a busy road, and I managed to get it sold and got a pretty decent price for it. Not too far below asking, even for being on a busy road like 24th Avenue. Here we're looking at row houses, or otherwise known as townhomes. 48.34%. I mean, that's bordering our definition of a seller's market. So, I mean, like I said, I always say my analogy, right, of all the boats in the harbor are being lifted, the tides come in, and it's lifting these as well. But you can easily see it's for the most part, it's the third choice for most people on what product they buy. This market last year in November was an absorption rate of 23.21%. And now we're at 48. So same situation, almost double the absorption rate. Our benchmark price, $299,100. So we're not seeing the same increases. But year over year, we're still up 6.44%. That's significant for townhouses. It's a good sign. I'm happy to see it. As we look at the solid numbers, 321 out of 664 have sold. It's the same situation. Last year we had 823 properties for sale, only 191 sold. Now we're at 664 and 321 of them have sold. 46 days on the market on average, and you can see our market distribution. This $300,000 to $400,000 range is creeping up to the under 300, which is, was I think almost 50% at one point. So the demand right here is going up. So if you own a townhouse and you want to sell, this is also a really good time to get in. And I do know that a lot of people who buy them, a lot of times people have gone through divorces or they want investment properties, or maybe it's a young family starting out. These are a real popular product for that because it's the next best thing to an attached or a home. Apartment condos, Well, yes. Obviously, we're lagging behind. 23.45% is respectable. It's up from 13, almost 14% absorption rate from a year ago. So the boats are getting lifted here as well, which is great to see. The benchmark price at 251, modestly though, up 1.45% from a year ago. Just can't seem to get the same traction that we're seeing with detached and semi-detached as far as price increases. But as I keep saying, it's positive. I know there's a lot of people that have condos that they would like to sell because so many people bought them at the wrong time. And at least the market is getting favorable and the market is coming back and the demand is starting to come back. So it's good to see. And that will happen as the price increases, because there will be some people that will get priced out of the market and they will be forced to buy a condo. But you can also see we're a long way away from the peak of 2014, where we're sitting right now at 251, where the peak was bordering 300,000. So we got a ways to go just to get back to where we were. As far as market distribution goes and the ratios, we had 332 out of 1,416. It's very respectable. That's up from 211 from a year ago. And of course, the inventory a year ago was 1,510. We're at 1,416. So those ratios are just looking better. I guess that's the best way to describe it. And I'm sure if you're having a condo and you'd like to sell, it's hopeful. But if you're a buyer, there's still really good deals out there in condos. And I think this is by far the bottom of the market's been hit. So it's a good time for buyers to get into the market and buy a condo. Under 300,000 obviously is our biggest market distribution for the condos. It really does drop off. That's just because most people are either downsizing to buy them, or it's an investment property, or first-time buyers. So let me leave you with this thought as we approach the Christmas season. Our detached market definitely is on fire. Our prices have gone up on average close to 15%. The median price is around 11%. That's a very significant increase for the year, which means you are in really good shape to be able to sell your detached house right now. And it's a really good time to move up with these low interest rates as well. So I would encourage you, if you're sitting on the fence right now and you're thinking of selling, I would be looking at putting your house on the market sooner than later. You don't have to wait until spring. A lot of people usually think that's the best time. This is a very good time to be doing it right now. I think we're going to see maybe a little more inventory coming on the market in February. We usually do. So you could really take advantage of low inventory and high demand and sell in the winter months of the year. I would recommend, if you have questions around that, please reach out to me. And by the way, some areas in Calgary, have gone up 25, 26%, depending on where you are. So there are some people that are pleasantly surprised at how much their properties are worth right now. So we have to, of course, analyze every individual property by its own merits. The location, the size, the condition, the floor plan, all of this weighs very heavy on your value. But I'm just so optimistic of how things look. So coming into 2022, I wish everybody the best. It certainly looked like at least the first quarter is going to be a very, very busy first quarter. A lot's going to happen. After that, well, it's kind of a wait and see. But I hope this information is helpful. It's been a pleasure doing these videos with you all year. And I do wish you and your family the best. And we will see you into the new year.